the system will break down at some point, probably still in my lifetime. It's so fragile that a slight disturbance could bring about an avalanche. People think always about making money. How to invest to lose the least money when the crash comes. In the next 10 years, it's not unlikely that we have another world war. I think the conditions for war are extremely favorable, extremely favorable.
Welcome to the Microscopic Podcast presented by GoldRepublic. My name is Alexei Joranov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at GoldRepublic, you will receive 1 free gram of gold. Just click on the link in the description. Well, today I'm joined by Dr. Faber. Dr. Faber here in Zurich, where you were born. That's your home city.
Yes, long time ago.
But you're back. And so my first question that I ask for first-time appearing guests is, what is your most heretical view about the monetary system today?
Well, I mean, my view is that the system will break down at some point. We don't know when. I remember, I started to work in 1970 on Wall Street in New York. And in the early 80s, I had some friends. They were the strategists of Merrill Lynch, which at the time was an independent firm. And they were very famous. Then Salvixen and Charlie Minter and Michael Arenstein, because they predicted that the excessive debt growth under President Reagan would lead to a collapse of the US by the end of the 1980s. And nothing happened. We had the crash in 87, which I lived through because I was at the time in Hong Kong. But the monetary system, such as we have, with excessive debt growth and monetary growth and inflation that is certainly much higher than what the governments are publishing, has lasted much longer than anyone could expect. And, there are lots of things that happened. When I studied economics, I stumbled upon Silvio Gesell. Silvio Gesell was an odd character, sort of an anarchist that was expelled from Bayern, and he settled in the Jura region of Switzerland. That's why the Swiss call him sometimes a Swiss, but actually he's a German. And he wrote about negative interest rates and the advantages of negative interest rates. And I have some of his books, in the first editions. But I never expected to see in my life negative interest rates. This is something for me that was completely new. And to have a debt explosion the way we have it, and that the system still functions, is unusual. But in the meantime, I traveled and I've been to high inflation economies like Argentina and Brazil in the 1980s, or more recently in Turkey and so forth. And I can see that with money printing, as long as you keep the liquidity going, the system can last a very long time until it breaks. And it will break at some point, I think probably still in my lifetime. And it could happen anytime. Because it's so fragile that a slight, disturbance could bring about an avalanche. We don't know, but it's going to happen. And that led me to the belief that you have to own some physical assets, among others, precious metals.
Talking about precious metals, this may be a simple question, but I think it's an important one. What is gold to you?
Where I grew up I was born in 46, so I grew up in the 50s, and life was very different. You asked me that I was born in Zurich and whether the city had changed. The whole world has changed, and Zurich and Switzerland enormously, because when we went to school and we walked through Bahnhofstrasse, which is next door here, and we saw a Japanese, we would go home and tell our parents we saw a Japanese or a Chinese. Nowadays, you walk through Bahnhofstrasse, you run home, you say, I saw a Swiss, because the majority of people on Bahnhofstrasse or anywhere you go are foreigners, they're not Swiss anymore. And so the world has changed enormously. But my grandparents in those days, obviously they had gone through two world wars, World War I and World War II, and were, because of that, extremely conservative in everything. And saving was an important component of their lives. And I always maintained you put 10% of your money in safe deposit boxes, or we have this system here in Switzerland, the Kantonalbanken. These are banks that are partly owned by the government and are usually quite safe, but there were times when they also went bust or had to be bailed out by the central government. But anyway, put your money, that 10% of your income on deposits there, and they pay the interest every year and so forth. That was a disastrous investment for me. My grandmother, she put the money every birthday, and every Christmas she gave me 50 Swiss francs, which was at the time a lot of money. Nowadays it's not much money. You can cut your hair for 50. In my case, the haircut is very, very cheap, but in your case, it's a different story. But anyway, I learned at the time that gold had some, store of value function, and that it was a stable currency. In other words, it was a safe thing to do to buy a few gold coins. And my parents and grandparents, they all had in a cupboard somewhere in the apartment or in the house some gold coins. They all had, not much, but for that time, money was very different then. And then I was on Wall Street and I worked for an American investment bank called White Wealth, and they did mostly stocks and bonds, but they didn't trade commodities. And I was at the time in Hong Kong, 1973 already, and in 78 they had some problems, White Wealth, because the 70s were very difficult for Wall Street. There were lots of mergers and lots of bankruptcies and failures and so forth. And White Wealth, the American part, was then taken over by Merrill Lynch, and the European part by Credit Suisse. And I was in the middle because I was in Hong Kong. But I decided to look for a new job, and I went to New York, and I went to interview with Goldman Sachs and all these firms, the prestigious one. And then someone told me, go and see Drexel Burnham Lambert, which at that time was already the king of junk bonds, high yield bonds. And I went there, and then they introduced me to the head, and he was the largest shareholder of the firm, at the head of the international department. head of the international department said to me, Mark, how much do you produce every year? Produce means how many commissions you get from clients per year. I gave him the figure. He said, Mark, you're hired. And we're going to be very great friends. And it's true, we fought all the time because it was a very Jewish firm and they expected me to fight back and so forth. But for 10 years that I was there, we fought about everything. But they all agreed with one thing. If they could join the firm, they would like to have my job. Because I was reasonably, I think after me, they never hired another Swiss.
So back to the
then I got into this commodity business and the gold business. And I found a large client in Indonesia who traded, millions per day, which in 1978 was a lot of money. He traded, sometimes 50,000 contracts as an individual. That was a huge amount. And I realized there was a bubble in commodities, so I didn't touch them. But afterwards, there was this deflationary period, 1980-81 to 85. That was essentially the low for commodities, but then they traded sideways until 99. In 99, the price of gold was still below $255. But at the time, I decided, when gold traded below 300, to accumulate gold and sit on gold. And if you ask me for what is gold for you, actually, I don't value my gold. For me, gold is a stable currency, and everything around it that is paper money depreciates in value and in its purchasing power. I mean, you say, okay, when I'm born, a croissant or this costs, say, 20 cents, and now it's $2 or so, and this is inflation. I could argue it's a depreciation of the purchasing power of money. Gold has done relatively well in its purchasing power, maybe too well, who knows. But if you said, Mark, because of your usual bad behavior, I was wondering where you kept a bottle of whiskey for me, but there's only water and coffee. But you have to go to jail for 10 years. And here is $1 million or 10 million. And you have the choice to put it in anything. In real estate, in stamps, in wines, in whatever, stocks, bonds, and so forth. I would have to say that if preservation of purchasing power was the objective, I think I would probably put it all in gold or silver or platinum. My favorite right now is platinum, but platinum is probably going to be a bit more volatile. But you understand, in the next 10 years, it's not unlikely that we have another world war. So a property, or it's not unlikely that we have the socialists take over a city and they go along and say to the rich people, you can't increase the rent of your tenants, or you have to do this, or you have to do that, to make it not profitable for you to own a property. You understand? That happened before in many countries, and expropriation is also always a possibility, as you well know, coming from Macedonia and Serbia. Is that correct?
Correct.
It is a very nice combination. We call them the gangsters in Switzerland, all Serbians and Croatians. Anyway, I think that gold would fulfill the function of preserving most of your wealth.
And why is that? In terms of history, when we look at also the different phases of how gold played a role in the monetary system, how would you maybe resume it in terms of the last 250 years, what the most important phases were?
The world, economically speaking, didn't grow much between, say, the time Jesus was born until, say, 1750. Also, the population didn't grow much. It grew a bit, but sometimes it went down during the Black Plague in the 14th, 15th century. We had a significant reduction in the population. The Romans also had periods during which the population went down. So this is a factor. Now, the last 200 years are characterized by the adoption of free markets and the capitalistic system. This has to be pointed out, that the world suddenly became much wealthier and the population exploded in 200 years because we had the adoption of free markets and the capitalistic system that favored economic development over, say, religious beliefs and, superstition and so forth. And so the agriculture became very, very productive. And we had the introduction of steam engines and then the railroad starting around 1830, 1840. And the railroadization of the world was a huge development because by 1800, the armies of Napoleon did not invade Russia at a faster speed than the legions of the Romans. In 2000 years, people walked and were in horse carriages, and maybe there were some improvements in the road system, but that is questionable because the Romans had very sophisticated road system and a relay system. In other words, the carriages changed horses in regular steps and so forth. So the railroad was a huge invention, as was then the telegraph and so forth and so on, and the construction of canals. And that led to, economic growth. And in America, it allowed the country to grow rapidly, especially in terms of population. By 1800, America had 4 to 5 million people. By year 1900, 100 years later, they were at 80 million. So the interesting thing that I want to stress is that by 1900, despite the population growth from 4 to 100 to 80 million, the price level in 1900 was lower than it was in 1800 because the railroads allowed agricultural products to be shipped from the countryside to New York and to the cities, which then lowered the prices and so forth. So we had a period of strong growth with no inflation. And then nowadays, the socialists call that the robber baron days and so forth, which is nonsense. The robber barons, they built railroads with their own money, and that benefited the population. And why is it that all the people from Europe went and wanted to go to America? Why is it? Because the opportunities in America were greater than in Europe, and because the price level was such that it allowed families to live better than they had lived in Europe. So the robber barons of course, there were greedy people, but that is the businessman. His occupation is basically in the capitalistic economy is to be sort of greedy. That you want to make money, so you have to offer, say, good coffee, or you have to offer good food in a restaurant, or you have to produce good cell phones for, communicating and so forth and so on. And you have an incentive to innovate. That is the key. The innovation, which under other systems that were non-capitalistic, under socialism, nobody has an incentive to do anything. But under capitalism, under the market economy, you can improve your life by providing better services. Anyway, or products or manufacturing. So these were times of strong economic growth. GDP per capita between 1800 and 1900 grew at a faster pace than between 1900 and today. Now, in 1913, some people had the brilliant idea to form the Federal Reserve in the United States. And since then, we have a period of pronounced price increases in the system. And interestingly enough, we are moved away to some extent from the free market economy, because in 1910, government spending in all of Europe, in all of European states, including the United States, was less than 12% of GDP, the government. Now, everywhere is around 50% of GDP, if properly measured. And so the government has nowadays much more influence on economic life than, say, in the 19th century, where economic life was extremely free. You went to a Western town, you just did something, there was no regulation. Nowadays, everything is regulated. It's a wonder that you're still allowed to go to the bathroom when you want to go to the bathroom. The government doesn't tell you, now you go, and thereafter not for, I don't know how many hours. But we've moved into a very regulated economy, and as a result of slower growth, because the government is like a cancer, and that you should know, you who come from communist countries. As soon as the communists were out, economic growth picked up and people had an incentive to work. Before, they had no incentive to work. And once people have an incentive to do something, they'll do it. If there are no incentive, they'll just walk like zombies. Anyway, the point I want to make is the money printing led to price increases, and it helped finance the expansion of governments. And I mean, you have to read the literature a little bit, how a system that is very capitalistic, like we had in the 19th century, moves into socialism. And the destruction of the family unit and the adoption of subsidies by the government, and then once the government hands you money for something, they also control you. And in that environment, I believe that you need to own some solid assets. Now, I am in favor of diversification, that you own some shares, some stocks, some bonds and cash, and in different currencies, and then some real estate and some precious metals. And ideally, you diversify geographically. In other words, you have shares not just in the US, in NVIDIA and Tesla, but in Latin America, in Asia and China and India and so forth. And you have real estate in different jurisdictions of the world and different countries, because you don't know, and I don't know who will win the next war. Maybe nobody.
Sorry to interrupt this episode, but I'd like to tell you more about what we do at GoldRepublic. At GoldRepublic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, security saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults, with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at GoldRepublic, we offer real assets to safeguard your generational wealth. Well, that's a very elaborated answer, I have to say. How would you describe now the way central banks accumulated reserves, gold stocks? We've seen clear trends. We are actually reaching, by the end of 2026, about 38,000 tons of gold worldwide that central banks hold, which matches the levels of 1965. And since 2008, central banks all around the world, but especially towards the East, have been net purchasers of gold. What has motivated those purchases for the central banks?
Well, that is a very interesting question that relates mostly to geopolitics. You know, if you went to India, the first time I went to India was 1973. It was an incredibly poor country with a few wealthy families. But I mean, there was hardly any economic development compared to, say, the Western world. Now you go to India, there are many cities that are, equal to European cities or from an infrastructure, better conditions. And the same certainly is true of China. I mean, the first time I went to China was in 1978. That was nothing. And the first time I went to China was to Shenzhen. It was across the border from Hong Kong. Now Shenzhen is larger than Hong Kong. It was just paddy fields, rice fields, nothing. And my Taiwanese friends, they're mostly Shanghainese and Fukienese. And they said, oh, the communists are so lazy, they will never do anything. But once they moved into the market economy in 1978, and Deng Xiaoping, Mao had died in 1976, and Deng Xiaoping pursued this open door policy from 1978 onwards, the country exploded. I mean, it's amazing when you see a city like Shanghai, where when I first went, that was also in the early 80s, you had to go to a window at the station, and someone had to write a piece of paper for you to get a taxi. And of course, nowadays it's very different. And the city is very modern and it's huge. So the world has changed a lot. And these countries, I think Miss Truss, who was the Prime Minister of Britain for a brief period of time, she was the Foreign Minister for a while of England. And she went to India, and she lectured the Indians about, democracy. Now here you have a country who last year became larger than the United Kingdom economically. They're now the fifth largest country in the world, economically speaking. And they have 1.3 billion people. And England has one problem after the other. But the British have the good sense to go and teach the Indians what to do. And this is the worst kind of diplomatic condition you can imagine. Because in India, if someone is hated, they're the British, because the British were the colonialists. And they hate them because they kind of formed a union with the Maharajas and oppressed the population. So it's not a very good, condition to have a diplomat from Britain come and tell the Indians what to do nowadays. It's the same like the Chinese. There's a country that nowadays, in terms of industrial production, say, you take steel, you take cement, they produce as much cement as the rest of the world combined. And they are a huge industrial power. And then some idiot like Macron from France comes and tells the Chinese what to do. As a Chinese leader responsible for 1.3 billion people, you just have to laugh at such a clown like Macron, the German, whatever the names are. She was the foreign minister, Baerbock. They haven't realized the world has changed. We have now the Western world. Our population in Europe is going down anyway. That has happened everywhere. Also in China, it's going down. But in Europe, we have many cities that are sort of disappearing because the industries are walking away. Why? Because the politicians in Europe did not pursue free markets and the capitalistic system, but they go back to idealistic ideas or thoughts, and they intervene into the free market left, right, and center. And these are not politicians that were businessmen or hardworking people, workers. These are academics. They went to universities to study politics, how to be a good politician. They never worked a day in their lives, but they tell everybody what to do. So I'm very bearish about Europe, economically speaking, but it doesn't mean that stocks go down. You just have to print enough money. And now we have this situation where the world has changed, as I described, where countries that were economically insignificant. In the year 1970, China consumed 2% of all industrial commodities in the world. Now it's around 50%. Some less, but some more. And with India, for sure, it's more than 50%. So anyway, we have this shift in the balance of economic power. And then these countries had lived under what I call neocolonialism. This is post-colonialism, post-Second World War. The Western countries gave them independence, yes, but still controlled them economically. Say, the French were very good at that in West Africa, but the British also to some extent. Anyway, now this is changing. The countries have developed economically so successfully under capitalism that they don't want to accept this patronizing kind of economic system. And before, most of them held their foreign exchange reserves in dollars and or in assets that they had in the United States. But now, recent events, in Afghanistan and especially in Russia, where the US and Europe froze the assets of Russians. I mean, if you're a Chinese or a Russian or a Brazilian or whoever you are in the world, you'd be mad to keep your assets all in the US. Equally, you would be mad to keep your assets all in the US. And I always tell wealthy people in the US, you feel secure, but one day the situation may be different. So my view is diversification. And this is the view of these countries like China and India. They think, why should we keep our assets, our surpluses all in the US? We accumulate gold. And the other difference is, a friend of mine, he's very intelligent, and he came about a year ago to my house, and he said, Mark, can you explain to me why is it that the US doesn't buy gold? They could issue treasury bonds, they get the money, and then they buy gold. So they issue something that is in surplus, in paper money, and buy something that is of limited supply, which is gold. Who knows? But I think I, as an individual, quite frankly, if I look at the last 4 or 5, Greenspan, I knew him because I worked for a firm in Wall Street, Whitewell, where he was the chief economist. But I knew him from those days. And I was one of the few employees that went to his presentations because they were so boring. But academically, he's a very brilliant person. He's very smart, and he's very thoughtful, and a nice person in some ways. But what came after him is basically a disaster. The last great central banker was Paul Volcker. After him, nothing. And in Germany, Hermann Pohl was, a great central banker with discipline. Like in Switzerland, we had Leutwiler. He was also a very disciplined central banker. But afterwards, they're all money printer. They all printed money. And when I look at them, and I have assets, say money, and I look at them, I don't feel like entrusting them my money. Then I say, okay, I buy some shares, I buy some gold. But the shares, you have to choose the right stocks, because some stocks go up and some stocks go down. Last 2 years, most stocks have gone down. It's just as that few stocks, say 20 or 50 stocks, went ballistic, so the index was pushed up.
Actually, talking about the stock market, or in general, how would you qualify the environment we're in 2025? Is it comparable to the 1968-73 of guns and butter plus inflation, or is it 1998 to 2000 with the dot-com bubble and tech mania tightening, or is it more 2007-2008 in terms of credit fragility?
It's maybe all of them together. There is a book that I recommend your viewers, and it's called The Economics of Inflation. And it's written by, he was at the time working for the Reichsministerium in Germany between 1918 and 1924. And he wrote about it. He then became a professor at Bocconi in Turin, in Italy. His name is Constantino Bresciano Turoni. I can't spell it, but if you look up the economics of inflation, this is the Bible for what happens during inflationary times to society, to the corporate world, to corporate profits, to the foreign exchange movements, and to stock movements. Because if you print enough money, what happens is the currency goes down, okay? Let's say I print money, but you have a stable currency. My currency will go down versus yours. But as a result of the decline of my currency against yours, there will be a time when the price level through the currency depreciation becomes exceedingly inexpensive in my country compared to your country. This happens in the mid-80s in Latin America. In all the Latin American countries, the currency collapsed, but stocks became incredibly cheap. You understand? In Argentina in 1986-87, the stock market capitalization was less than 500 million US. The same in the Philippines, 300 million US. So that offers huge opportunities. And in Germany, the currency depreciation exceeded for a while the appreciation of stocks. So stocks became very cheap. But from that low level, they went up 10 times within, say, 2 years. And so there are opportunities in the share markets, but we have to look at share markets that are relatively low. Now, emerging markets are relatively low. I mean, are enormously low compared to the US. Now, people will tell me, well, the emerging markets have these problems and that problem and so forth and so on. The difference was always there. They always had problems. It's a question of valuations. And I mean, Hong Kong a year ago was very cheap, and we recommended Hong Kong shares, and they've gone ballistic in recent months. And 2 years ago, Argentina was very cheap, and we had an exposure to Argentina. And 3 years ago, it was Turkey. The Turkish stock market was dirt cheap. But when I talked about Turkey at the time, my Turkish friends said, oh, everything is so bad, it won't go up. But I told them, yes, it's so bad, and that's why the valuations are so low. So as an investor, you should actually look for things where things are really bad, where there's no hope. I live in Thailand. I don't think the conditions are very good economically, but the stock market's cheap. It's not expensive. So I think because the money has flown into NVIDIA and the FANG stocks and the Magnificent Seven and semiconductor stocks, other sectors have been neglected. And there are lots of sectors. The mining sector would be one. It's gone up now, but it's still relatively cheap. And when people talk about speculation, we live in a world where everybody's speculating in something. But I look at ETFs. If there was really a bubble in gold and silver, the ETFs, the shares outstanding would have gone up substantially. But no, the outstanding shares of ETFs are down. It's very strange that you have a bull market, say, in precious metals, and individuals are selling. Very unusual.
If we look now at the stock market in terms of valuation, you've just mentioned that the US is overvalued compared to, let's say, emerging markets. Is this a typical formation or anatomy of a bubble led by AI stocks, mainly, or tech stocks?
A bubble is usually characterized by money flowing into one sector, or sometimes just one or two stocks. You know, the Mississippi scheme was basically one stock, and the South Sea bubble also. But there were lots of other companies that were similar. But there's a dominant stock now. I'd say the dominant stock in the US would be NVIDIA, actually, in the world. It's a $4 trillion market cap. You know, people, they say inflation is, or they talk about inflation when they go to Migros. Here there's a supermarket chain, and they pay more for food, they pay more for the washing powder, they pay more for clothes and shoes and so forth and so on. But inflation is an increase in the quantity of money that then lead to different symptoms, with stocks going up sometimes real estate going up, sometimes wages, sometimes consumer good prices and so forth and so on. So it's very difficult to define exactly what inflation is, because it can move from one sector to another sector. In my opinion, stocks in the US are high, but elsewhere they're relatively low, but they're not that dirt cheap. I mean, I'm an investor in equities, but I don't find them, dirt cheap like they were in 2009. Stocks became cheap. And 2003, after the dot-com bubble had collapsed, they became cheap. And gold in 99, 2000 was cheap compared to the Dow Jones. I never sell my gold, and I like gold and so forth, but I don't think that it's that cheap.
Gold.
Yes, but I have friends, they still maintain that people who don't buy gold today, they will regret it. Maybe. I still buy gold, but not in a huge quantity. I increased my exposure to platinum. Throughout my investment life, over the last 20 years or so, I have advocated diversification: stocks, bonds, precious metals, real estate. And bonds include cash.
And now?
Well, because gold has gone up so much, of course the asset allocation has changed, and I'm not selling gold. I sometimes think maybe I should sell gold and buy gold shares or stocks, but I don't have the courage. And for me, people think always about making money. I think how to invest to lose the least money when the crash comes. And the last 2 years, I wake up and so forth, and I feel in a good mood because my Asian stocks went up, my stock portfolios went up, and my gold holdings went up and so forth. And I always think, what will my mood be if every day I wake up with less money? And I may think, okay, I have less money, but my neighbor has even less money. Say I drop by 20% and he drops by 50%. So relatively speaking, I become richer. Much richer than if I go up by 20% and he goes up by 100%. I worry that my psychological state will not be as good when I lose money every day than when I sort of kind of make money every day. That is what I'm thinking about. How do I protect my assets and lose as little as possible? Or if I lose, is because it is my desire to lose. Say, I may choose, I live in a country that is basically very poor. People are not starving because we have a large country, Thailand, and the population is relatively small. So food is always available. Plus, in the teachings of Buddha, it's very important to share. So if I have food and you have nothing, it is my duty to help you.
You mentioned earlier on the potential for world war, another world war. What exactly do you mean by that?
When you look at how World War I broke out, which was historically seen one of the most stupid wars that could happen. And then you have World War II, and again, it was unnecessary. But it became a huge war. It became huge. And nowadays you have these armies and the generals and all these crazy people running around. You never know when someone presses the wrong button or who has the power to press the button. Something starts and then it escalates and so forth. I mean, we have, for the first time in history, and we had that for the last, say, 30 years, we have the power to destroy the whole world easily. And that is something that is dangerous. I mean, we all think about making money in whatever stock and so forth. When the thing blows up, there's no use. So my view is, if you think through the scenario of destruction, of, say, wealth destruction as a result of physical damage, say, you have a village, then there's a volcanic eruption, the whole village is gone. There was significant wealth destruction in that particular area. When you think about this, you think about, well, what kind of assets do I want to own in that situation? And then I go back to physical precious metals. But of course, not all in the same place. You want to have some maybe in your pocket.
If we look at now the way the East, especially the BRICS countries, are accumulating gold, it looks like they are playing a game which is against the dollar, kind of like an anti-dollar trade, or at least to bring some more freedom, which you also described early on, in terms of setting their own rules of the game with trade and intra-trade as well between those countries. How do you see this architecture of the monetary world order changing through the resurgence of gold in the system?
I wrote my thesis for my doctorate degree about Robert Peel. And until Robert Peel, Britain had the Navigation Acts and they had the Corn Laws and so forth. And most of the trade in the British Empire went from, say, colony Malaysia to Britain, and then from Britain somewhere else. You understand? But everything had to go and pass through British ports. But after the Navigation Act ceased, it was trade between two different countries and no longer through Britain. And it had an impact on the English economy and the port cities, of course. And the trading system constantly changes. I mean, Rome was at one stage the dominant city in the antiquity, but later on other cities came up and so forth and displaced Rome. And then Rome was just the capital, but had no economic significance anymore. And that we have to live with, that the trading pattern can change. You know, it's like if I buy with Hong Kong dollars, Swiss francs, or with Thai baht, I buy Swiss francs, first the money flows to the US, and then from the US to Switzerland. The clearing banks are in New York. And that, in my opinion, will change. This, I think, is inevitable. Now, the Western countries, they have two options. Either they accept the change or they don't. If they don't, the war is more likely.
You believe that gold will be then used as a trade settlement?
Who knows? That I don't know. You know, there's lots of things that are happening with cryptos and stable coins and so forth and so on. In my view, it's another form of paper money. But this is my view. Other people who are maybe more knowledgeable have a different view. But if you give me the option, Mark, here is $1 million. You go to jail for 10 years as you deserve. You can either choose bitcoins or gold. I will choose gold. Now you and the Generation Z, the young people, they will all choose bitcoins. You understand? It's a different world. I choose gold.
Some commentators, like for example, Willem Middelkoop, believes that gold will be a huge part of the monetary reset that is on the way, but it will take time, and that America will not willingly abdicate the role of the dollar that easily. What is your view on that? What is your timeline, and what trigger would set this type of monetary reset, in your opinion?
We don't know, but I agree that the US considers itself as a superpower, and they believe in American exceptionalism. This exceptionalism is a complete illusion, you know. I laugh about it, but they will not give up easily the role of the dollar. No way. And as I said to you, if you read, say, books about war theories, you know, when the conditions in the world are favorable for conflict and when the conditions in the world are less favorable for conflict, there's always in the world some conflicts. The Pax Romana, as they call it, is a kind of a story by historians. It never was a Pax Romana, but they were the dominant power at the time, unquestionably. The US won't be able to control the whole world. There's an out of the question. And depending who is the president of the US and the mood in the US, it may lead to war or not. If Trump is president, I think the danger is higher than, say, another president. And my view is, if I read the war series, Organsky and so forth, I think the conditions for war are extremely favorable, extremely favorable.
Because of that reason, because of the fight
the change in leadership and the change in trading patterns and the monetization of the Western world. I mean, when I started to work, the stock market was 25% of the economy in the US. Now it's 150%. And the people that own this 150%, they're not willing to lose it easily. They want to keep it. So all these things lead to tensions in the system. The tensions are very great, internally and externally.
Well, Marc, thank you for your time.
Well, my pleasure. Time to go for a drink.